Hey traders, Raghee here, and in this free recap video we're going to talk about bonds, gold, and housing. So what we want to kick off here is, first of all, trend following. What is it what we're looking to do on specifically bonds and gold? And this is a pure trend follow. Ultimately what that means is I'm going to look at the green grab candles that we have here, and I'm going to focus in on the bullishness that they are showing me, and then I'm going to look at the wave, the 34 EMA on the high, the close, and the low. That is the green, the blue, and the red lines, moving averages actually, on this chart, and buy into pullbacks. Preferably the pullbacks are going to be, at least for that day, a full 1 point pullback. All right, now that has to do with something we call daily price movement range, and that's the way that we gauge volatility on a 15-minute basis, on a rolling 15-minute basis, hourly basis, and a daily basis. So if volatility is not part of your trading plan right now, find a way to do that. You've got to make that part of the way in which you identify exhaustion, as well as where stop placement and target placement needs to be. All right, so pullback buys on the bonds. And I'll tell you what, you take a look at this bond market right here, and I do find it rather interesting that the bond market is up on a day that the S&P is up. Now, one of the things I mentioned in the premium video for members yesterday, and I want to mention it here today, is both the NASDAQ and the S&P are at levels that are going to present another test for the bulls. I think NASDAQ is definitely going to likely want to run stops towards 7,000. That's a major psychological level. But what's going to be interesting here is how long does the Facebook rally last in terms of keeping the NASDAQ strong. And really, we've seen a pretty decent little surge on Amazon today. Amazon might dictate. I think Amazon's probably the last major market that is going to dictate what side of this 200 right here that we're going to stay on. We're going to be above, or we're going to be below. I think Amazon's likely going to be maybe having the final say-so here as we wrap up the month of January. So bonds continue to be a buy despite what would be a conflicting signal from equities. What else continues to be a buy? Gold. Now gold is actually an easy conversation because gold is something we've been bullish in since it was chopping in fall of 2018 and basically bouncing around the 1220, 1205 area. Well, if you think about having what we know now as of January 4, which is a dovish FOMC. First was the comments that Jerome Powell made in an informal setting with Janet Yellen and Ben Bernanke at an informal sit-down on that Friday that the Powell put was placed when he uttered the word patience. And then the second dovishness was yesterday's official shift in the rate statement. So if you're not tracking these rate statements, they're very easy to track. It's no worse than high school homework. All right, you can keep it on the Fed statement tracker. It's a free service from the Wall Street Journal, and this is something that I recommend most traders keep an eye on. And the all-important wording shift, further gradual increases struck through, and this is our second dovish FOMC. Now think about this for a moment, and I find this very interesting because this is now the second time. Let's look at the month of January. This is now the second time. The first time was here. The second time, of course, was just yesterday. This is the second time in basically a month that the FOMC has given us sort of a pseudo rate cut. Now what do I mean by that? The dovishness here behaved in the markets like a pseudo rate cut. Here, again, the dovishness and the rate statement change. The Powell put informally placed on January the 4th, and then the actual follow-up now, nearly 4 weeks later, right, is the official shift in the tone and possibly soon the policy, but it really behaves as the second pseudo rate cut. How many of these do you out there think we're going to get? I mean, it's a rhetorical question, of course, but how many of these do you think we're going to get before the market has to take a good look at what's been a lackluster season for earnings, what continues to be global economic slowdown, Europe, China most emphatically, right? So these are things that I think about. You know, I understand why the market's up, but I also understand that we've gotten basically 2 pseudo rate cuts in the month of January, and here we are sitting at, I think, a very important technical and I think from a timing perspective, precipice on where it is that the market thinks we go next. This is the second most bearish. This is the second most bearish that I have been, gang. Okay, so just a quick, let me go back to gold here real quick. So again, why is gold continuing to be a buy? Dovish Fed. I just explained just how dovish this Fed has been over the last 30 days. Very dovish. And again, not actual rate cuts, but certainly preparing the market for the pause and eventually a shift in the tone of the Fed. Interest rates heading lower. I think bonds are giving us that cue. Growth and inflation. Take a look at GDP from a price to price to price momentum or rate of change standpoint. We rock the macro. What does that mean? We rock the macro in this room, in this membership. I do this in my macroeconomic analysis, and I've been doing it ever since I started getting much more into Forex trading 20 years ago. Okay, this is the process, ABCD. We have slowing growth, we have slowing inflation, and if you rock those numbers, rate of change, just like the rate of change indicator, gang, it's a momentum indicator. What is the current momentum of these numbers? And they continue to tick lower. Okay, but growth and inflation heading lower, it may not be working out in the equities markets yet, but it sure as heck is helping gold move higher. Let's stick long with gold. We can start talking about gold miners here soon, but again, let's be long gold. Let's stick long with the bond market, and we've also stuck long dollar, short euro. Continues to be the gift that keeps on giving, and I will see you all in the next update. Thanks so much.